Hi folks, Tuesday, January 6th. Welcome back to Full Bore Silver. Wow, what an explosion in all the metals. Gold, silver, platinum, palladium, zinc, nickel, aluminum, lead, copper. Copper, we called it yesterday. We looked at that falling wedge and said if it broke 599 resistance, it was headed up to 613. Now that's a different metric for some exchanges use the tonnage, but make no doubt about it, copper is going higher. Copper will be a ripper over the next decade. It's needed for everything, energy build-out, industrialization, data center AI, etc. We've got our eyes on copper, but right now the focus is on silver. We are breaking through major levels. It's green candle after green candle. We just broke a major resistance level of 80.9320. And we are headed higher. I mean, you're talking almost 6% up today on the second largest asset class in the world, valued at $40 trillion. So, yeah, it is a ripper. You're talking $600 billion put on market cap this morning. And the miners are going nuts. Now, if you're a regular viewer of this channel, and you should be because I give you actionable intelligence with which you can harvest fiat out of these markets. Of course, the main case is to stack physical, but we're also trading. We're trading equities, options, futures, miners, and the miners have been laggards, especially in silver. And they are going wild today. Core, Pan American Silver, First Majestic, Barrick, Newmont, I've all talked about. But Hecla this morning, 12% up. Wow, what a run today. I took a little off the table. See green, take green. You can never be too sure, and nobody ever went broke taking profit. But my main position stays as is. The thesis for Hecla is it goes a lot higher. I did exit my leaps, so what I do is buy long-dated 80 delta calls in the money in the miners that I really have high conviction in, and then I pay for that time so I don't have the theta, the time decay. And I usually buy them later in the day when the implied volatility is lower, so the premium cost is lower, and also on days when we see retracement. So you got to time that and be smart. Have your trigger set, have your stop losses set. It's not for everybody. It is like a leveraged long on silver playing these minor plays, but wow, what breakouts. And again, for the average investor, I don't particularly recommend getting into miners, but if you are, stick with the gold standards: Newmont, Barrick, First Majestic, Pan American Silver, Core, Hecla. Now, I put together a 2026 prospectus and kind of thematic overview for my old man. He was way too heavily concentrated in AI plays and high-flying tech and Mag 7 plays, which of course all the assets under manager people like JP Morgan and Vanguard and Fidelity are all recommending, keep piling into NVIDIA, keep piling into Broadcom, etc. No. We are at all-time nominal highs in the SPY and NASDAQ. It's completely overblown. Look at the Shiller-Cape ratio that we've talked about before. The price of these stocks to the earnings, there's never been more of a spread, except for we're at the second highest level. I believe we've beat out the 2008 crash, so we're higher than that, and we're almost as high as the dot-com 2000 crash. So I am very, very cynical, skeptical, and cautious about the S&P moving forward. Now, Gareth Soloway and Michael Oliver and a bunch of other smart people are saying, hey, the SPX could keep running. It could go to 8,000, but at a certain point, you're gambling. We're completely overblown. We have treasury flight. We have divestment from the U.S. economy. We've pissed off a lot of major players around the world, a lot of BRICS nations, and they are pulling their investment out of the United States. We also have the unwinding of the Japan carry trade. Okay, that pumped $10 to $20 trillion over the last decade and a half into this overblown tech bubble that you are seeing right now that has turned into an AI bubble. How much AI do we really need? Nobody knows. I mean, where are they going to get the silver to act as that conductive metal for all these data centers? Where are they going to get the copper? Where are they going to get the rare earth materials? Well, they're talking about building a smelter in Clarksville, Tennessee, but that's going to take a little while to ramp up. You know, you take over countries and steal their resources, of course, but you got to go mine them, you've got to refine them, and you've got to come out, build the infrastructure, get the labor, get the environmental permits, get et cetera, et cetera. It's going to be a while. We're a little behind the eight ball industrially, this country, but it is going to create ongoing demand for all these precious metals and base metals. What I recommended for my old man is, instead of holding more of the speculative mining stocks, especially like Silver Juniors, and yeah, I've talked about those too. I really like Aya and Eris and, you know, some of these others, but play the big boys, but also for a broader exposure, something like Freeport McMoran, FCX. Right there, you've got copper and gold exposure. Rio Tinto. This thing is a Leviathan, Australian company, one of the largest in the world. Gold, copper, aluminum, lithium, iron ore. It's got an EBITDA of $23 billion a year. Free cash flow of $7 billion a year. Copper will be a monster, and these names will maximize on that copper explosion. So take a look at those if you're interested in some equity exposure, minor exposure, but you are worried about the risk. Little more conservative plays, or you can go with the ETFs. I really like the Sprott funds. None of this is financial advice, by the way. Schuckman did a really interesting interview with Liberty and Finance, and just talking about markets and premiums, and also Don Durrett, the miner guy, talks a lot about miners and has the spreadsheets and everything. Well, he predicts, and it's always good to listen to the contrarians, he predicts a retracement of gold back to 3,500 and silver back to 50. So I think you do have to plan for the bear case. I don't think that's going to happen personally, but you know, I do always have some dry powder so I can jump back in and pound those names and buy more physical silver if it does retrace. But looking at the reaction of these markets, now I hear they're standing for delivery on gold contracts in addition to silver contracts. This has been played very, very smart by China, okay? They haven't accumulated all at once. They need all these materials. Little by little, like Schuckman says, they've done these backdoor deals with mines in Peru and Argentina and Chile and Mexico, Canada, Australia, etc. More based in South America. They go in, they buy the ore, the unrefined stuff, and the dory, which, you know, is basically like rough blocks, brick blocks of gold and silver, easily shippable, and then they bring it back and they refine it in China, which, you know, China is 75% of the world's refining capacity silver-wise, so they have the infrastructure set up. Very interesting. But much like the Japanese carry trade created this arbitrage effect of borrowing low in Japan, sending the capital to the United States, which got invested in tech and, you know, the stock market, created this vacuum flow of capital to the West. Now we have a different kind of arbitrage going to the East. So you have the ridiculous COMEX monopoly prices set at whatever it was yesterday in the 70s. Hong Kong, Shanghai, Tokyo, they were at 89, 90. So what does that do? That encourages traders to buy contracts from COMEX at this price, stand for delivery, and then use that arbitrage, sell Shanghai, Tokyo, Hong Kong at this price. It creates a natural vacuum. So China is vacuuming silver, creating this arbitrage market. It is in their interest to keep these prices in Shanghai higher because it sucks physical silver. And what are we left with in America? No precious metals, nothing for industrial build out. The scumbag bankers get a marginal profit from selling these contracts, as if Jamie Dimon needs another $10 billion in his bank account. I mean, it's very destructive to the United States. It's a national security threat, but it's reality. And at some point, these banks get caught with their pants down. So, interesting. Had a commenter call in, write in. Britannia's in UK going for as much as 92. I guess British pounds, which would be $1.24.57 an ounce in US dollars. I predict that we get these little micro markets that develop around the world for real valuable physical precious metals that are sought after, like Britannia's, Libertad's, Eagles, etc., Maples. If you have them and people want them, you can set whatever price you want. Price is relative to position. COMEX monopoly money doesn't matter anymore. Okay, they don't set. That's a nonsense price. They could set the price if it does retrace. They set the price to 50. And Aaron Texas Silver made a really great point. He said, "Okay, say it retraces to 50, 55, 60. The premiums are going to be another $10 higher anyways. Good luck getting it at 50, 60. So if you're waiting for that retracement." I don't think it's going to have the payoff. And what if it never does and it just keeps going higher? So I would stack physical metal. I'd get in now when you can, when it's sub 3 digits. Again, have some dry powder if it does retrace, but that's that. Again, I think the U.S. stock market and all these traditional methods of making money they're becoming obsolete. It is completely overblown. Want an example? Yesterday, drone companies, after this Venezuela invasion, Kratos was up 12%, Ondas 9%, Unusual Machines 14%, Xena 9%, Aero Environment 18%, Dragonfly 8%, Red Cat 15%. Now, I have traded in and out of all these drone names. Drone technology is fascinating. We no longer fight wars conventionally like General Patton did. Wars are fought with intelligence, finance, cyber warfare, drones. Okay, you don't send 50,000 Marines ashore. This isn't D-Day anymore, and that's part of why I called the Venezuela thing an invasion. And some people really took umbrage with that, but it was smart if it wasn't all a scam and there was some backdoor deal with China or Russia or whoever to let it go down. I mean, it legitimately probably cost the CIA hundreds of millions of dollars to pay off the generals and everybody else to stand down, not use any air defenses, anything like that. And they were able to pull Maduro out. But you can bet that, there was a lot of drone technology used overhead, Predators, Global Hawks, etc. Chinese are making drones the size of insects now. It's wild. But, a lot of these companies, it's like the quantum companies. It's, you look at like Qubit, IonQ, Rigetti. Have you seen the headquarters of some of these places? It looks like a Joann's Fabrics in a strip mall, for God's sakes. Your valuation is $8 billion and you look like you sell thumbtacks and knitting needles. It's unbelievable. So I think a lot of this stuff is overblown. Again, physical precious metals, that is where our focus is. Pardon me. I'm going to show you a really quick chart. This is going to take like 1 minute. And just to show you how these bull wedges played out. So watch this real quick. Be right back to you. All right, guys, here you can see our breakout patterns from last night. I mean, are you recognizing a pattern here? Wedge up, wedge up, wedge up, descending column up. So here's what I do. I see this wedge. I can just instinctively glance at a chart right now, see it instantly. I set my trigger here right at the top of this flagpole, which is 76.3515. Let's see here as well, which would be 76.32, 77.87, 79.37. I've literally traded these on a ski lift before. My notification goes off on my trading view. I am in. If there is good volume, there has to be good volume as well, and then we just see that leg up. So leg up, consolidation, leg up, And I mean, silver is pushing right now. Again, our next level. And what we do here is zoom out to 4 hours. I only play on the 1 hour and the 4 hour. Anything less than that is just noise. So anybody that's playing on the 1, 5, or 15-minute chart, they're probably trying to sell you something. I'm not trying to sell you anything except for harvesting fiat out of these markets so you can stack more precious. So yeah, our next level is 83.75.7. We'll call it 83.76. That's the all-time high. We break that and woohoo, look out above. So let's go assault that high, and that is your daily chart lesson. I will say I'm also a member of a Discord group of probably 2,000-3,000 people. That's mainly regular equities and Mag 7 and all this stuff. And the Discord group leader, he had a successful morning, and what he did is trade Amazon and Costco. You can see this is just a classic, beautiful flag pattern right here. Beautiful wedge. He traded it when it broke 878.60. These contracts are super expensive because the price per share is really high. But we all use proprietary Alertify software, so I see exactly when he takes a trade, and then you can get in and out of trades in microseconds. It does cost money. It comes in handy if you're trading, if you're really scalp trading in and out of trades, and I mean 10, 20 seconds. Every second counts. But he made $87,000 this morning on this trade and Amazon, which has the exact same pattern breakout. So, you know, you saw that volume spike, that's your green light to go. And he was in and out of the trades. I think it was 17 minutes, called it a day. So, you know, that's a little bit better than schlepping to work and getting yelled at by your head of HR. So, yeah, I love the technical analysis. I think it holds a little bit more true for traditional equities and Mag 7 than it does for miners and metal equities, just because there's more volume with the traditional stuff. But that is your daily chart lesson, and thank you very much. All right. Our next major level on silver is 83.86, the all-time high. I think we hit that. It could be hours, it could be a couple days. I don't know. It is a full-blown assault on that all-time high. Silver's going higher, miners are going higher, the base metals are going higher, all the precious metals are going higher. I have a super cool unboxing that I'm going to release later today. Apologize for the casual attire. I was just back from the gym. So you've got a couple really awesome pieces that I'm going to show y'all. And so enjoy that. And man, it is such a gorgeous day in Texas. We're going to be 85 degrees today. So we're going to go jump in the pool, get the dogs in there. It's going to be a great day. But y'all have a fantastic day. Again, thank you so much to all the new subscribers. Please like, subscribe, share, and share with your friends, investment buddies, people you talk about finance, politics with. Because in the end, we are trying to help people that are trading, help people that are stacking, people thinking about retirement, maybe people that are working that 9 to 5 and, you know, they're fed up with the debt-based fiat money system and they want some other answers as to how to get ahead. You know, the S&P investment at 10% a year, you're not even making up for inflation. So physical precious metals, full bore silver, out.